You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That music means we're back here at least one more time here for the crazy mad year that is 2020. For, of course, our Monday edition of the Option Block, everyone's favorite bi-weekly source for all things options related. I will be your host, your guide, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. You guys have really responded to our network kickoff segment. It started as a fun lark earlier this year, but you guys have sent in suggestions in mass. So we thought we'd kick off the network broadcast schedule the same way we have been throughout most of the year, one last time here. So put your thinking caps on, listeners, and see if you can name that 80s theme song / show. Here we go.
State of the art. Lay down the law. Don't you let them cross the line. Under the hood, got the bad and the good. Everybody's doing time.
That was a fun one. That was sent in by Tim C. Thank you. You guys remind me of all these shows that I had pretty much completely forgotten about. That's a good example of pretty much everything 80s crammed into one show. You could hear it from the theme song. You had cars, fast cars. It had guns, so some sort of crime fighting element all mixed together and pretty much made everything you wanted from a good 80s show. And also probably a show where maybe the theme song maybe was better than the show itself. Who knows? But a fun one nonetheless. Thanks for that, Tim, for bringing that smile to my face. Now let's see who's joining us to help us play this fun guessing game, as well as everything else we're going to do on the show today. Let's go back out to the NASDAQ hot seat one last time here for 2020. We are joined once again by Mr. Scott Nations, the president over there at Nations Indexes and the creator of a little thing we've been talking about a lot this year called VOLQ. Scott, A, welcome back to the program one last time for 2020, and B, can you name that theme/show, sir?
Well, thanks for having me back. It's a show I've actually never seen, but I'm going to guess from context. Can I go ahead and guess?
Go for it.
Is it Knight Rider?
Oh, that's a good guess. It's got a similar, shall we say, a similar oeuvre, a similar genre to it of fast cars and crime fighting, but not quite close. I'll give you a close. The guy, one of the main guys, actually looks kind of like David Hasselhoff. I'm sure that wasn't an accident. I'm sure they cast him for that reason. That's close. It's close. Let's see who else is joining us here. Let's go back out to, I think, our reigning champion of the 80s theme guessing game for this year, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program at least one more time here for 2020. And then B, more importantly, sir, can you name that tune/show?
Great to be here. I'm going to take a flyer. I never watched the show, but I'm just taking a flyer here. Hardcastle and McCormick.
All right, now you're Shazamming or something in the background. How are you getting all of these shows out of nowhere? Are you using some sort of artificial aid in your endeavor, sir?
Well, I knew it was a car show, and so, like, what car shows are there from the 80s? I mean, I know it's not Knight Rider. I know it's not, like, the A-Team, and so, I mean, it's an 80s car show. That's the only thing that I would have known.
Wow. All right. That's a good pull. You got Airwolf. Now you got this one. You're getting some deep pulls, sir. I have to admit, I am impressed by the depth of your 80s theme show knowledge. That's a good pull. That's kind of an obscure show. All right. And last but not least, also joining us, Mr. Greasy Meatball from OptionPit.com by way of Carmen Line Capital, a.k.a. Mr. Mark Sebastian. Mr. Sebastian, hey, welcome back to the program. And then truthfully, did you know that one like Uncle Mike did?
No, I did not. I was going to throw out chips, but I know it's not chips. So that was, I had no idea. Hardcastle and McCormick, that's an impressive one. That's
a show about, fighting crime while you're in fancy cars, like pretty much every show was in the 80s. All right, well done. Great suggestion. You guys have sent in so many great suggestions. You guys have really made this segment from a fun little random lark into actually a fun thing to kick off the network every week as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right. You know what's coming. Time for the Trading Block. Time to break down what the heck is trading, what is lighting up our trading screens at least one more time here for the dumpster fire of a year that was 2020. And coming into the show, we saw all this brouhaha over the weekend about the stimulus. First, Trump was on board. He was going to sign it. Then he all of a sudden pulled a left turn and said, I'm not going to sign it. I think everyone should get $2,000 rather than $600. That, of course, caused a lot of consternation because many things were baked into that bill that needed to keep going, such as funding the government and everything else like that. So finally, it sounds like Trump backed off that threat to veto the stimulus bill. He signed it, so you're getting your $600, but he's holding out hope that there will be more coming down the pike. And it seems like markets are liking that to kick off the trading week here. Most of the major indices firmly in the green. We got the S&P and the NASDAQ kind of neck and neck for a change, both up about 0.85% or somewhere in that ballpark. Dow, the laggard, up about 0.2%. And that means most of the major vol products kicking off the show. Remember, we didn't have a show last week on the Christmas Eve holiday, so going back a full week now to last show, we're seeing most of the vol products have come off substantially. VIX come into showtimes at about 21.25, puts it down about exactly 4 points from our last show. VVIX, aka the vol of vol out there, at about 113.5. Puts it down about 7.5 points. VXX, a product you guys like to fade so much, feeling the fade this week, down to about 16.5. Puts it a little over 2 points shy of where it was this time last week. And, of course, the newest addition to the volatility landscape, what we've been talking about for most of this year out here, has been VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100 at about a 21 3/4 coming into showtime. Puts it down almost 3 points, about 2 3/4 points from where it was this time last show. Since we're talking VOLQ, let's start out there in the NASDAQ hot seat. Scott, it's been a little bit since you joined us. You were last on the show back in early October. Obviously, a lot has happened in the markets, in the world, and in the volatility pantheon since that time. Most importantly, the election, but a bunch of other things. So maybe catch us up. Obviously, it's also been the time frame that VOLQ has been live and has been trading out there. So catch us up. What are your thoughts on VOLQ, how it has progressed, and the response you've seen to it so far here for the end of 2020?
We've seen a wonderful response to VOLQ, particularly from asset managers. Mark, as portfolios start to look more and more like the NASDAQ 100, asset managers, particularly professional asset managers, are really desperate for something that allows them to hedge risk without reducing their exposure to equities. I mean, the NASDAQ 100 index is up 47% year to date. It's up 47% year to date. And so, if you think that's great and you have a mandate that says, I want you to more or less look like the NASDAQ 100, then you can't just take a bunch of money off the table, because what happens if we end up jumping right after the first of the year? So people are looking at VOLQ as a way to hedge risk while maintaining equity exposure. And again, that's important as more portfolios start to look like the NASDAQ 100. So, and you're right, we've had a bunch of things that volatility hedgers have been worried about. Obviously, the election, well, fortunately, we're past that, and some of this other stuff. So, one of the things that's probably underreported is we're now done with Brexit. I think that the odds of a no-deal Brexit were very low, but we now know that we have a deal. And, we're also into the point now where people are actually getting COVID vaccinations, that's fantastic news. So, volatility's come in a little bit, as you would expect. How's VOLQ done? Again, the reception's been really positive. The order book is getting deeper and deeper all the time, and that's going to be important for hedgers who have a lot of stuff to move. We're also getting a lot of calls because hedgers can turn to their banks and do block trades. And so we're really pleased with our partnership with NASDAQ and with the Mercantile Exchange for VOLQ. Markets are tightening up. We know that takes a while for any new market, but as the order book fills up, that's even better news.
You mentioned those asset managers. Is that where the bulk of the initial response and the initial interest in this product has been? Has it been on the more sophisticated asset manager side? Or as we've seen in 2020, this is the year of the awakening of retail to everything, including volatility. Have we seen some retail start to dip their toes out there as well, Scott?
We have seen a little bit of actual retail trading. But, I think one of the things that's going on is, and we can talk about this a little bit later, fascinating article in the Wall Street Journal today about people using a bunch of leverage, that is a bunch of margin leverage, and using options. And I think what's going on right now is while people are really increasing their usage of options, they're doing it in a way that it really is just a way to get levered exposure. That may not be the best way to use options, but people are using options to just get levered exposure to headline stocks, maybe like Tesla or names like that. So something like VOLQ is kind of a second derivative of that. And you have to really understand what's going on, because let's face it, if you're buying calls in Tesla, you may not even know the definition of implied volatility. You may not care. You just want that sort of exposure. So we're starting, initially the people who are interested in VOLQ are really sophisticated institutional managers. And I think that once some of the people who are just buying calls to buy calls really understand how those get priced, then I think we'll see even more interest in VOLQ.
The legions who are buying calls to buy calls, they certainly have made up a growing and perhaps a surprising percentage of the market out there. And Tesla and a lot of other names that you just mentioned there, Scott. This is the first time we've really had a nation shares kind of product live throughout some of these tumultuous events to end the year here. So we haven't had you on since the election, and we saw a lot of vol madness leading into that and coming out of that, and of course now with the vaccine. So now that we've had a product live for a few months here, Scott, anything really surprise you about the performance, maybe leading into the election or coming out of it, or maybe now in the wake of all the annihilation of vol with the vaccines? Anything really come across your radar that you said, I didn't expect that when we launched this, Scott?
One thing I didn't expect was is the number of questions, inquiries we get about the relationship between VOLQ and VIX. And so we've always kind of followed that. We follow it in more detail right now because we've gotten a lot of questions about it. So I know that people are interested in trading that relationship, that is VOLQ versus VIX, and I understand why. It's bounded to the downside, it's bounded to the upside. It's a spread, so it works differently, and it's also mean reverting. So we've gotten a lot of questions about that sort of a relationship, which is good. We like to see people using our products in innovative ways.
Just anecdotally from the feedback we've seen, that's definitely a big consideration. Everyone wants to learn how these new vol products fit in, how they could spread against the existing products that they know, and VIX, for better or for worse, is the one most of them are familiar with out there. More to get to VOLQ in a little bit. We keep going around the horn here. First, let's go back out to the winner of our 80s theme, not just for this week, but for this year. It's an informal poll. I'll have to go back and tabulate the results myself, but I do believe Uncle Mike is our victor, so a victory lap is in order for him. So Uncle Mike, sir, you get to go next. That's one of your prizes here. What is lighting up your tape on this certainly Uncle Mike type of Monday, sir?
Got it. So I did want to say this too, Mark. I didn't get a chance to say it when you had asked the question. Did I get some type of help with this? I did technically Google search 80s car shows, and that was one of the names on the list. So I did do that one. And it was just, so I did want to make sure that I am an honorable 80s theme guesser, so that is disclosed.
If you type 80s car shows, isn't that just the entire list of every show from the 80s? Weren't they all car shows in some capacity?
Well, I think they were, but I mean, I'm thinking about this in my head, like, no, it's not. I didn't think it was this one, didn't think it was that one. I was kind of going through all of them, like, well, what the heck other car show is in existence? And that one popped up, so that's what I did do, so full disclosure on that one. But I did not listen to any songs on it or anything like that. So that's how I did get my answer, but that was a tool I used. But anyway, going through in today's market, I definitely think this is kind of a benefit of the stimulus being passed, the market is benefiting from stimulus, at least likely being 600, 2,000, who knows. But I think the market likes that. Now, whether or not this is going to be good for our economy or whether this is going to be good down the road, who knows? That's a debate for another show. But I do think that's kind of what's driving this market today. No question about that. Just some notable names that I'm seeing on here. Apple's up over $4 on the day, so that's definitely something that's to the upside and the excitement. The other thing that's making a case now is the metals, and that silver's back above 24 again, or had a pretty nice day on that. And so, it just kind of goes back to when you print more of something, it's going to be worth less, meaning the dollar's not going to do quite as well. And so when the dollar does worse, a lot of times precious metals go higher, and so silver, the one that I follow fairly frequently, is definitely higher on the day. So we do have that in play. And so on this, the VIX is not having a lot of movement, or we're not getting a lot of movement and volatility. And I can let the other guests kind of comment on VOLQ a little bit more. But ultimately, going into next year, we do have certainty from the standpoint of the election, at least at this point, unless there's some type of coup or hostile takeover of the United States that we don't know about. But we do have that certainty for the most part. We have the optimism of the vaccine coming, and even people on both sides of the media, both sides of the whole COVID issue, a lot of them seem to think that life will be somewhat back to normal in about 3 to 6 months. There's very few people that'll debate against that. Of course, there's no guarantees on that. Maybe the vaccine won't work. We could have other problems, etc. Excuse me. But the general sentiment on this is that that's what is going to happen, and that's why I think a lot of the optimism is coming from. And so when you infuse more capital into our economy, temporarily, it's definitely going to be a good thing. Now, once again, over the long term, if it does things to the dollar, we have a lot of inflation that might not be good. But like I said, that remains to be seen. So I think that's what's driving this market at this point. And, it'll be interesting to see if we can kind of get over these levels. I mean, we're tinkering around the all-time highs right now. And if you base it on closes, we are at new all-time highs today. But we'll have to see where things go, because this 37.35 mark, or these 37.30 mark in the SPX, it's going to be, we're kind of at our levels of resistance right now. So it'll be interesting to see if we can continue to push things forward.
No such thing in resistance to the upside in the year that is 2020, Mr. Uncle Mike. Just nothing but up for all of the major indices. Let's go back around the horn, down deep into the heart of Texas. Mr. Greasy Meatball, sir, a lot lighting us up. It's been a week since we've had a show here, at least for the option block here, so a lot's happened on the vol front as well. What is lighting up your tape on this very green Monday, but not so green for the vol products, sir?
Well, I want to quickly circle back to what Scott was saying, where he was saying, more and more portfolios are looking at the NASDAQ 100. That's because the NASDAQ 100 and the S&P 500 are looking more and more alike. By my best calculation, about 25% of the S&P is tied up in the 6 stocks that make up over 50% of the NASDAQ 100. You've got Apple, that's almost 7%. You've got Microsoft, Amazon, Facebook, the Google twins, and Tesla. And then those are the top 7 holdings of the S&P. Number 8 is Berkshire Hathaway, and they own a significant portion of Apple stock still. So you are now looking at the NASDAQ 100 and the S&P 500 are actually becoming more and more alike every day as we pass, as these mega caps get bigger and bigger and bigger. And that's one of the real benefits, I think, of VOLQ, is it's going to allow for, for, let's say I'm an S&P 500. I own a lot of SPY. Well, if I'm worried about, hey, look how heavy I am on these stocks, I can potentially hedge a S&P 500 portfolio with something like VOLQ, and I may get a better result than even using the VIX index itself. So there's some interesting things there, especially as we head into earnings. Things on my tape. Yes, S&P is up nicely. We have the NASDAQ up. The Russell 2000 a little soft today. It had been a leader all last week. It's weak today. And I'd point out that, we're coming off a 3.5-day weekend and the VIX is down. That is, that tells you that vol's in pretty substantially, if all other things being equal and we were just kind of resetting for the date, the VIX would be up, 1.2, 1.5 points. So we're getting a pretty significant sell-off in volatility, yet the VIX curve is still nicely contangoed, a lot of steepness there. There's about a 2-point spread between the Jan VIX future and the cash index, which tells you that, if you are a double X shorter or a UVXY shorter, there's definitely some potential for some true suckage out of those ETFs. A few other things I'm watching are the retailers. Macy's is having a great day. Ulta is having a great day. Nordstrom is having a good day. Walmart and Target are up as well. But a lot of these, COVID names that kind of got slapped around by COVID, look pretty darn strong today. Macy's in particular is potentially going to be back over 12 today. So that's a nice move on Macy's. The automakers also look okay. We continue to see some names that stink, being like the phone companies. They don't look very good. And, that's about what's on my tape. Some of the real hot names, a lot of the energy names, a lot of the real popular Robinhood names are getting smoked. DraftKings is down big. Neo, Plug Power, Palantir, all the names that are Virgin Galactic, all kind of the hot up and coming names are off a decent amount today. So kind of an interesting rotation where we've got Apple up huge and the airlines up big, and you've got some of these power companies, some of these battery companies and names like that down. The one that I think is actually kind of interesting that's down is Palantir, because you would think with what happened in Nashville, a company like Palantir that's basically surveillance would would be potentially interestingly bullish because names like CrowdStrike are up nicely after what happened in Nashville.
The markets they're up nicely today. Let's see if the volume is commensurate with that upside move. Coming into the latter portion here of the trading block, we see VIX putting up pretty light numbers, about 145,000 contracts on the tape. The ADV is about exactly 400K right now, so not a lot of action out there on the VIX front. SPY, similar story, about 1.6, almost 1.65 million contracts on the tape. The ADV is a little bit north of 3, about 3.3 million contracts out there. The S, similar story, about 600,000 contracts on the tape as of a few minutes ago. The ADV is about exactly 1 million out there. The Q's at about a little north of 500,000 contracts. The ADV closing in on 850,000 contracts. That's come off a bit. That was north of 1 million a while ago, too. And small caps, a.k.a. IWM, looking at 360,000 contracts. The ADV is about 584,000. Let's move on out to what you guys are trading in the most active single names. Kind of light out there as well. Only cost you 191,000 contracts to break into the top 10. That gets you all the way to AMD, a perennial top 10er now, struggling, clawing its way to hang on to its spot there. Number 9, Disney, 194,000 contracts. Number 8, Microsoft. So far, some perennial top teners here. Microsoft, 222,000 contracts. Number 7, Facebook. Has been a good couple of weeks for Facebook out there. 270,000 contracts on the tape. Number 6, the aforementioned Palantir, 373,000 contracts on the tape. Number 5, Amazon. Now we're getting up there a little bit. 447,000 contracts for Amazon. Number 4, NEO back in the top 5 there, 455,000 contracts. Number 3, this is going to surprise you, Tesla. Number 3, 589,000. You may be saying, Tesla, only number 3? What could possibly usurp everyone's favorite / least favorite electric car maker out there? Well, if you've been following the news, you know it's BABA at about 605,000 contracts, just managing to slide past Tesla for the number 2 spot, getting in a little bit of hot water over there with Chinese regulators. I guess they said some stuff that the folks in China did not like. So as a result, they're cracking down pretty hard now all of a sudden on Alibaba and all the related, the Ant Group and everything else they have going on over there. So as a result, that's translating into some paper to the tune of 605,000 contracts. Number 1, you know what it is. It's Apple at about almost 1.7 million contracts already. Just blowing the doors off everything else. Almost 3x Tesla. Just already here today. So another crazy day for the fruit company. Before we roll out of the trading block, speaking of crazy, I want to touch on what Scott mentioned a little bit earlier, this article coming out of the Journal. You know, we've been talking for a while that this influx, this massive tsunami of retail one-lot traders has been hitting the options market in 2020. A lot of them using them in, shall we say, specific use cases out there. Most of them buying calls on your Teslas and your Apples and everything else out there, using them very much as a surrogate for the stock, very focused on Delta, almost ignorant of just about everything else out there. And this article kind of hits on that as well, kind of looking at the leverage aspects of options and what's attracting the retail masses. Scott, this one came across your radar. Why don't you give our audience a quick synopsis of what the article is about and what your thoughts are, sir?
Well, the article is really interesting. It talks about margin debt, that is, people borrowing money to buy more stock. And there's not necessarily anything wrong with buying stocks on margin if you do it sensibly. You can't do it all day and forever until your head caves in. But margin debt is at a record, and given where the stock market is, I guess we probably shouldn't be surprised, but we probably should be worried. But there's also in this article a lot of talk about people who are simply rolling the dice by buying call options. They talk specifically about one guy who lives in Nevada who just went crazy buying Tesla options and turned a little bit of money into a whole lot of money. And I say good for him. But my takeaway from this is that options can be used to generate payoff profiles you can't generate any way else, and to generate better returns or lower your risk. And that's how sensible investors use options, as opposed to speculators who are simply selling their home and putting all the money into Tesla options in the hopes that Tesla goes to the moon. It did this year, and so it's worked out. But normally this sort of speculation, and that's what it is. This is not investing. Normally, this sort of speculation doesn't end real well.
No, we've been talking for a while there. What impacts this tsunami of, shall we say, new neophyte option traders to the options market here? What impact they have inside of bidding up the call skew in names like Tesla? And it sounds like one of those other ancillary impacts is margin debt, maybe getting a little bit worrisome. Mark, I know you've been spending a lot of this year kind of tracking what these one-lock traders are up to. A, does this level of margin debt surprise you / worry you? And then B, what are your thoughts on how these folks are using their options here in 2020?
Yeah, anytime margin debt starts going up as we're hitting all-time highs and VIX and VOLQ are still in the 20s, I worry a little bit. And yeah, I think the other piece that's fascinating is how short-dated all these option plays are. It really is people treating this like it's a sports gambling site sometimes. They're buying 20-cent options, 30-cent options, playing in low-dollar stocks looking for a move. It's really been fascinating to watch. And then, again, they pile into all these names. One of the things I've started doing is monitoring the Reddit stock feed, because that's kind of where a lot of this excitement starts to generate. Reddit has become a bit of a treasure trove for, pumping up different stock names and finding names before they even start to hit people's radars. It's unbelievable. It's like a Wild West on that message board. It's pretty unbelievable. I would get in huge trouble if I started to speak about different stocks and that I own in a way that it goes out on Reddit. I mean, that thing is unbelievable. So yeah, I think you have a lot of people that are unemployed that are, I watched this TikTok and it was this girl who is like, it was the funniest thing I've ever seen in my life. And I know it went a little viral. And she's like, one thing I'm really good at is making money. And if you don't have money, that's fine, because you're about to get $600 checks. But here's 2 things you should go. I want to talk about Plug Power. And she goes, its code is PLUG. She's out there pushing stocks and doesn't know that the word is stock symbol, and she calls it its code. It was one of the more unbelievable things I've ever seen. So there is a bit of a Wild West out there on TikTok and on Reddit that is something to behold at this point. I'm looking back at what's going on there in a couple of years will be an interesting case study for a lot of traders.
Yeah, if you're getting your stock tips from the code talkers on TikTok, then maybe you should be looking elsewhere. Maybe we should be putting our content out on TikTok to help the kids out there who are getting their checks from their grandma, tell them how to invest that money. Really quick before we roll this segment, Scott, I know you've been tracking the put activity in something like SPY, let's say, versus something like Apple, where it's a little bit more call active, sir.
Well, yeah, let's look at what the broad market is doing. So as of right now, about 58% of the option activity in SPY, which is the broad-based ETF, 58%, just over half, is in puts. And that makes sense. That's kind of the way it is. But to tell you just how bubble-licious the Apple activity is, and full disclosure, I own Apple shares. In Apple, it's 20%. Just 20% of the options traded so far today are puts. That means 80% are calls. And that tells you that it's just a bunch of speculation going on. It doesn't make a whole lot of sense, and it's certainly not investing.
I like that. Bubble-licious. You may have just coined a new word for us here on the show, Scott. As we keep on rolling into our next segment, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the portion of the show where we get weird, we get wild, we unleash our Eye of Sauron upon the markets and see what it comes back with on this penultimate episode, shall we say, of the option block for 2020. Probably going to truncate it a little bit because we've been gassing on a little bit about your margin and everything else over there. I love a good trading block where there's so much to sink our teeth into. So let's see what our eye of Sauron has fixated on really quickly today. Let's start off out there in Global Payments Inc. This is a frequent offender. It pops up on our radar every now and then. And it's back on there and on there for some size. Real quick rundown. Global Payments, ticker symbol GPN. A year ago was trading, about 181.35, and it sold off in the Great Nadir down to about 105.5, so it got clipped pretty aggressively. But it came back pretty aggressively, too. By that date we watch a lot, June 8th, it hit 189 again, so pretty much had gotten back to where it was there at the beginning of the year. Then it kind of languished in this 160 to 190 range for a while until the last couple of weeks, actually, where it kind of rallied back up north of 200. It's at 208.71 as of a few minutes ago. Let's see what our Eye of Sauron found really quickly out here. Looks like it's going out to Jan again. Jan calls, in particular, Jan 2021. Doesn't that sound so futuristic, yet it's only a month away, listeners? It's the 220 calls, so a little optimistic, a little out of the money here. Going up for $139,705 times, one of the larger single name prints we saw going up out there today. For a frame of reference, there are earnings, but not in this cycle. The next earnings coming up are on February 11th, so it's not an earnings play. The market was about $1.30 at $1.55, so this guy hit the bid about 10,000 times. So it seems like Mr. Meatball, our friend here, was doing a little bit of aggressive call overwrite, looking to harvest a little bit of the old risk premium, but not doing it through earnings. He's not a crazy person, sir. Is that your takeaway as well, Mr. Meatball?
That is exactly what this looks like.
You can always tell a genius. He agrees with you completely out there. So we're going to put this in our to be watched category. We'll come back to this one in about a few weeks or so, see how this one's faring out. Next up is a newcomer to the odd block. This one is a fun one. This is BZUN Inc., ticker symbol BZUN. If you're wondering what the heck is BZUN, this is a e-commerce solution for brand partners in the People's Republic of China. I gotta wager this activity may be having a little bit to do with all that drama unfolding out there in Alibaba right now. BZUN, by the way, ticker symbol BZUN. Let's see what we got for a 1 year performance out there. Right now, 31.5. A year ago was about 33, 32, so a little bit north of it. Then it sold off back in March down to about 22 and change. And then it rallied pretty hard. By July, it had hit July 8th, 46.14. That was actually the apex for the year. It kind of gave up the ghost after that and slowly sold off down to about 32 and change. Then it bounced recently up to about 42 and change. So it did have a little bit of life very quickly in November, right around the election. And then it sold off again pretty much ever since, down to where it is right now, right around 31.5. So it's been an interesting story here for the year for BZUN Inc. Let's see what our Eye of Sauron found out here really quickly. Looks like the Jan, once again, going out to Jan 33, so slightly out of the money calls, going up 7,330 times. For $1.12, that's about 7 cents off the bid. They were 105 at 125. It's going up over there on the MIAX. There are no earnings in this cycle. The next earnings announcement is on March 17th for good old BZUN. So Mr. Meatball, kind of a bit of a interesting, sizable yet mid-market play here in BZUN. What do you think? You think someone's betting that the upside is in play here because of all the drama with Alibaba, maybe translating some of that business here to BZUN? Or maybe you think someone's saying, I think the upside is topped out a little bit here, and I'm going to take a little bit of that premium off the table, sir.
Yeah, I think the former. This is probably more of a gamble on upside, or a gamble on being able to take advantage of Baba's loss. I don't know what Jack Ma did, but he has pissed off some people at the CCP. The way they're going after Ant, the way they're going after Alibaba, this is not something that is done unless they are extremely upset with him. So I'm very interested in what's going to go down with Alibaba over the next couple of days, because if this thing turns into an all-out punishing, then that who knows the downside on that stock.
Yeah, I mean he gave a speech that apparently they did not like. He criticized the regulators over there, and that was apparently the straw that broke the camel's back out there. We'll save this review of Angie's Home Services for a little bit later here, because now we have to keep on rolling. It is Monday, listeners. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, here we go. One final time for the strategy block in the year that is 2020. We turn once again to Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, a lot of things could be top of mind for you as we end this year, including perhaps maybe a little bit of concerns about valuation, a little bit of concern to the downside. What do you have for our folks here for your final strategy block of 2020, sir?
Well, I want to talk about hedging today and what we're doing for hedges and how we do this. So at St. Charles Wealth Management, of course, as everyone who's been listening to the show knows, I'm a branch of RCM Wealth Advisors. St. Charles is just kind of the name I use because it's the best town in the world by all means. But anyway, we work as a team in that we have different strategies, but the strategy I want to talk about today is our hedged strategic night strategy. Strategic night is our stock strategy. For information on that, you can contact me at the end of the show. We'll talk about that. I'm not much of a part of that. In fact, I'm not a part of that at all. But the part of the strategy where I am is we have another branch of it that we refer to as the hedged strategic night strategy. And so with the hedged strategic night strategy, I want to kind of go through what we did in 2020 and what we're planning to do in 2021, because we just entered the trades this morning, as a matter of fact. So I can't give exact exact strikes and expirations, but I can be pretty general on how I'm doing things. And I think you'll get an idea of the methodology with which we used last year. So in January, what we did was we bought essentially a 1-year put spread. And this was last January. And so the reason for that is that number one, vol was so insanely low at that point, based on what we were thinking, that we're more than happy to go out that far. But number two, we want to have it so that our hedge is a hedge. It's not designed to be traded. It's designed to be a hedge. And so with that, a good year for the hedge strategic night is that we lag the strategic night by 1% or 2% because of the cost of the hedge. And so what we did in January, we bought a 1-year hedge, and we buy it on SPY. And the reason we do that is because there are just so many stocks within the strategic night that we want to hedge the index. And so we believe we'll outperform the index, which we have a long track record of doing. George and Chris, in terms of the stock picking, not me, but with the hedge itself, we want to make it so that clients have that protection in place. Now, we choose to buy put spreads and not just puts themselves. We're not concerned with a doomsday scenario to where the market's just going to drop 30, 40% or something like that. It can happen, of course, but that's not what we're concerned with the hedge. So we bought this put spread in January. And when you go as far out as we go, if you have a 3 to 5% downturn in the market in month one of a 1-year put spread, the put spread's really not going to do that much for you because of the fact that you're so far out, you have minimal gamma, you still have the short leg of the spread technically working against you. It's really not going to do much. So we want it to be more of a long-term thing. So since we're not concerned based on the put spread of a massive downturn, well, what the heck do we do when a massive downturn happens like it did in the early COVID days of March? Well, here's what we did. The put spread, while it helped us, what really did help us even more was the fact that George and Chris, our stock guys, they got out of stocks. And so no matter what you do, stock plus long put, if you're doing a 1-for-1 ratio on it, of course, 100 shares to 1 put option, is never going to be as good as just simply being in cash. Cash is going to outperform because there's no time to gain cash. So with that, what we try and do is work as a team from the standpoint to where we get out of stuff when things go low. And so we've never done this in the history of our strategic night hedge, but we actually got out of a 1-year hedge in month 2 of the hedge itself. And so we got out of it for a profit. And the reason that we did was because of the fact that we were at the lows of the market. We were down very minimal with our portfolio. So what we decided to do, we're like, okay, let's just kind of reset the year. And so for a period of roughly a month, we had no hedge on because we were in so few stocks. Once that we started getting back into the stocks, then we put the hedge back on in roughly mid-April. Markets skyrocketed, of course, the way that they did. So in August, we rolled up the hedge. And then today, we just got out of the hedge because of the fact it expires in a couple days. And then we renewed next year's hedge. So what's our plan? We want to use a put spread instead of a put because we're not necessarily concerned with a doomsday event. If the market goes down 8 to 10% on the year, that's par for the course. It's going to happen. So we're trying to protect against things like that. However, if we do have some type of major event in the market, like we had last spring, where the market did go down, I think it was roughly 35%, then we had to take action, and we did, and we got out of stocks. So what I want to go through today in terms of how we hedge things, if you're looking for a clean dollar-for-dollar hedge and not being active in any way, shape, or form, then I think you need to just buy a stock, put on a collar, and wait till expiration. It's really the only way that I can see that happening. But if you want to be active and you want to have some type of a long-term hedge, you kind of want to have a little bit of both the way with which we do it, then I would suggest not only having a hedge in place, but also having the ability to get out of some of your stocks if need be. And that is the strategy block. Last one of 2020. I'm really enjoying saying last of anything 2020, quite honestly.
Yeah.
Back to you, Mark.
I think everyone is looking forward to putting this crazy year behind us. Been a great year for the network through that very slim lens. It's been a good year, but yeah, it's kind of hard to look back on 2020 with any sort of fondness, no matter what you're up to out there. Scott, I know this is a topic that resonates with you as well, the notion of using puts, or in particular, put spreads as a hedge. Before we roll out of the strategy blocks, or anything you'd like to add to what Mike was just talking about, sir?
Well, I think Mike makes an interesting point. Let's point out, though, that, if you want to just buy a one-year put, at the money put, to hedge away all of your downside risk, you end up paying over time about 8% for that, which is almost coincidentally almost exactly the return you can expect over time, about 8% a year from equities. So I think Mike makes a great point. If you want to hedge, and options are a great tool to do that, put spreads are the way to do it. Why? Because, as Mike pointed out, because you're long and short, big changes in implied volatility don't hurt. And while you're paying a little bit of money in erosion, you're also collecting a little bit of money from erosion. And so a put spread is really by far the best way to put on a hedge, particularly if volatility is high or if skew is high, because if skew is really high, you're getting a lot of extra money for selling that out of the money put. At Nations Indexes, we say you get the math working for you. So I love the strategy. Yeah,
and Scott, I would add in that I think especially with with VOLQ and VIX in the 20s, when eventually these indexes get back down to their normals, and the VIX is back at 12 and the VOLQ is 14, something like that. That's when you're going to start seeing some traders talk about, hey, because someday there will be call options in VOLQ. Hey, what about a call spread in something like VOLQ or a call spread in VIX? And it's a different way of skinning a similar cat. But, again, spreading makes the most sense because of the way skew is structured. But, just wanted to add that little wrinkle in there that eventually when we do get back to normal, some volatility hedging is going to be another way to look at managing this market.
It wouldn't be a normal episode of the Option Block without a few of your questions. Let's see if we can squeeze in a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's dive right on into it. It's been a tumultuous, very negative year for a lot of people out there. So I'd like to kick this segment off with a little bit of love, a little bit of positive vibes. This one coming from Max. Max says, I just want to take a moment to thank Mark and everyone else for making such a compelling network. You guys kept us all informed, educated, and even entertained. Well, we try throughout this pile of crap year. I'm sure I speak for many people out there when I say my year in parentheses, and my trading account, would have been much worse off without your content. Thank you also to all the sponsors who continue to make this content possible. Here's looking forward to another great year of content in 2021. Well, thank you very much, Max, and everyone else who's sent in similar sentiments over the course of this mad year that has been 2021 or 2020, coming up on 2021. We have seen more of you out there than ever before. It's great to see so many new listeners out there too, which is fantastic. Hopefully we can help steer you into some of these more, shall we say, efficient uses of options rather than just riding high on the lottery tickets and hoping for the best. So thanks for that, Max, and everyone else out there who sent in similar sentiments. All right, let's go on out. Looks like, Scott, we got a little bit of confusion around VOLQ tickers, which is interesting because it's all there in the name. But nonetheless, we've had a few listeners recently ask about it. First off, we had my boy Luigi. He chimed in on our show last week. He said, good morning. First of all, Merry Christmas to all. My question, I use the investing.com app. VOLQ is not listed. Is there another ticker? And then we had a similar question coming in during the show today from Game X. He wants to know, what is the trading ticker for VOLQ futures at CME Group? So, Scott, maybe a little bit of a dissonance there between VOLQ, which is kind of the name of the product, and the index, and then what's actually going on over there in terms of trading it at CME. So maybe you could clarify for our listeners out there what those are. Have at it, sir.
It's a great question, and I can't speak for investing.com. The ticker symbol for the index, the cash index, is VOLQ, and it's available on every asset or information provider that I've ever come across. It's even available on Google Finance, Yahoo Finance, and of course all the major ones. The ticker symbol for the futures, and this is a great question, for the futures at CME, the ticker symbol VLQ. VLQ is the ticker symbol for the futures. That's what you got to plug in if you're going to trade the futures at the CME.
All right, real quick, we got one more here. Kind of an obvious one, but maybe you can put some thoughts to rest. Also gives us a chance to talk really quickly about the options. This comes from Bethesda. So I guess the town of Bethesda sending us a question. They want to know, will VOLQ options be cash settled when they are launched? I think the answer to that one kind of obvious there, Scott, but maybe also, before we wrap up here for the year, I know they're talking about the options sometime in 2021. Can you share with our audience as well any updated timetables or horizons you may have for when we might see the options next year, sir?
Well, it's no surprise that that NASDAQ intends to trade cash-settled options on VOLQ, and they expect to launch those and I'm not speaking for NASDAQ, but they intend to launch them just as quickly as possible, just as quickly as regulators will allow, and that will almost certainly be in the first half of 2021. So you can imagine that NASDAQ's working hard to launch those. They will be cash settled, and they settle against the special opening value, VOLS, is that value. We calculate that every day, so you can see how that works.
I lied, Scott. We actually got one more VOLQ one here. Since I got you on here, I might as well let you answer all these. Save me some time, Scott. This last one comes from MCD75. He or she wants to know, what if we see another year of customers buying, or I should say mostly buying, out-of-the-money calls in tech names? Will that be reflected in an I think it means an ATM vol measure like VOLQ? Interesting question, a good question, Scott. We've talked many times how everyone's just loading up on calls and Tesla and Apple and everything else out there. But VOLQ, obviously, an at-the-money index. So walk through for our listeners how those two relate to each other.
That is a great question. And VOLQ focuses on strictly at-the-money options. We did that because I spent 25 years as a professional option trader. First question everybody asks when they walk back into a pit or sat back down at their option trading desk is, what's the at-the-money vol? So that's what VOLQ measures. As far as deep out-of-the-money calls being bought up, that will lift volatility in general across the entire skew. So that will eventually be reflected in VOLQ. There are a couple of caveats, of course. Somebody's buying a bunch of deeply out-of-the-money calls. How much will that raise at the money vol? Well, that's open to debate. And also, if you buy a bunch of single names, even if they're members of the NASDAQ 100, how will that be reflected in the NASDAQ 100 volatility itself? That's also open to debate. So the question is a good one. The answer is yes, that will eventually be reflected in VOLQ. How much? Well, that's open for interpretation.
Be interesting to see, certainly when we see those options come out, how all of that plays in as well. But great questions, everybody. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's keep an eye on and tell you what we're keeping an eye on our trading screens for the rest of this, yet another truncated holiday trading week. Let's start deep in the heart of Texas. Mr. Meatball, sir, what are you keeping an eye on for the rest of this trading week?
Yeah, it's a shortened week. We have Friday off. So I'm going to be watching to see what the VIX does ahead of these Georgia elections. What we didn't bring up is Zoom and its precarious fall. And so I'm keeping an eye on Zoom, keeping an eye on all these hot names, DraftKings, Neo, Disney at a new high. So the individual names are really compelling right now.
All right, Zoom taking it on the chin, 356.34 right now, off from 420 a few sessions ago. So big drop out there in Zoom land. Uncle Mike, in addition to long-term put spreads, what else are you keeping an eye on this week, sir?
Well, we're a couple points away from the all-time highs right now in the S&P 500, so watching to see if we can break through that. Today, with the news that kind of surfaced yesterday around, I think it was like 4 o'clock, about the stimulus looking like it's going to pass, we're really not that much higher than what we were in trading in the aftermarket and in the Sunday night trading. So curious to see if we can break through, and perhaps I can say my never before comment for our show on Thursday.
We shall see. And Scott, last but not least, sir, in addition to VOLQ, what are you keeping an eye on for the rest of this truncated trading week, sir?
Mark, I'm watching the NASDAQ 100. All of the major indexes would make all-time highs if they close right now. The interesting thing about NASDAQ 100, it's the only one that's up more than 1% on the year, up 40 or 1% on the day, up 1% on the day, up 47% on the year. Wouldn't it be fantastic and incredible and amazing if it could end up higher by more than 50% on the year?
That would certainly be quite the capstone on the mad year that is 2020. Unfortunately, listeners, that music means we've come to the end of our 1-hour sojourn through the world of options. But before we go, Scott, if our listeners, it sounds like they certainly are, if they're intrigued, they want to learn more about all things VOLQ, where should they go? What should they do, sir?
They should go to our website, nations.com. Nations.com. That's the website for Nations Indexes. And if you're interested in specific information about VOLQ or any of our products, there's a way to email us there.
There you go, nations.com. Also, NASDAQ.com/VOLQ. Everyone has questions about the ticker and everything else. There's a lot of data broken down for you, basic information about the product and where you can go to trade it. All there as well, NASDAQ.com/VOLQ. And Mr. Greasy Meatball, sir, if folks are intrigued, they want to talk to you about Zoom or about Palantir, all the Robinhood stuff you've been doing of late, or indeed your old standby in the VIX, where should they go? What should they do, sir?
Yeah, go to optionpit.com, get on our email list. We put out good email content about volatility and trading every day. So make sure you're reading our blog, following me on Twitter at optionpit. And look forward to the rest of this week.
All right, and last but not least, Mr. Uncle Mike, if folks want to reach out to you about strategic night or perhaps long-term put hedging or anything else, where should they go? What should they do, sir?
stcharleswealth.com. Visit my website. I'm one of the few financial advisors on the planet that works with the option product. Feel free to contact me.
There you go. stcharleswealth.com is the place to go. And on behalf of Scott and everybody over there in NASDAQ land and the Greasy Meatball, also the Rock Lobster in there as well, and, of course, Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in so many questions. By the way, if you're listening live saying you need a little bit more in your air holes, don't worry. We'll be back in about exactly an hour, a little bit less than that now, to talk all the mad volume and volatility and skew and everything else out there in the world of crypto. Spoiler alert, it's a lot. We have a great guest to help me do just that, so I'll be back in exactly an hour. And, of course, we'll see you throughout the rest of this week, at least going into the Thursday, Friday range. We'll see what's going on with Thursday and Friday. We'll make sure we'll get you some fun stuff. Hopefully you guys enjoyed the top 20, or top 5s, I should say, we put out there for 2020 for vol views and for TWIFO and for the option block. Those were kind of fun. More of those coming as well. And we'll see you throughout the rest of this week for more great content. And then back again next Monday for another episode, the first one of 2021 for the option block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.